Hello guys, welcome back to a new episode. RALLYTOP Investing 3.0 SMC Masterclass here. In today's episode, I want to take you through how I prepare and start my new trading week. This is important for you so you can understand exactly the steps to take when the market opens on Sunday. I do not expect you as a trader to just open your chart on a Monday and jump into the market. Please take the steps I'm about to share with you today and you will see your trading change tremendously. Now, the first thing I do for the new trading week is that I check the economic calendar. Now, economic calendar is available everywhere online for you to check. And what I do is that I configured my economic calendar to show only the high and medium impact news, because these are the type of news that can actually make a difference in the market. So I look for that. Now, the reason why I need to check for the economic calendar is not so much that it can actually affect my analysis of the market. It is simply so that I can be able to know what time a high impact news is coming up. So maybe if I was in the market, I could take partials or even close my trades or things like that. It helps me to plan my trading. Okay, so that's just the purpose why you need to check the economic calendar. Now, having done that, the step 2 that I do take is to go to the weekly time frame. You may be wondering why I should go to the weekly time frame. Well, I'm a day trader. Nevertheless, I will first have to check the weekly time frame. What am I going to do with the weekly time frame? Is just simply that I want to see what is going on the weekly time frame. Now, I'm not going to check for the structures of the market on the weekly time frame. I'm not going to mark anything on the weekly time frame. What I'm going to do on the weekly time frame is to observe the behavior of each of the candles that I'm talking about. I will have to look at how the previous week's candle closed, because it will give me a deep insight on what is expected for the incoming week. So if the past weekly candle is showing me a reversal signal, what I should then do is to go to the daily time frame to check for either of these two candlestick patterns that you are seeing here. Meaning that after the weekly time frame, you will have to switch to the daily time frame to find any of these two candle patterns. Either you find this first one, you can call it engulfing pattern if you like, but this is what you need to see on the daily time frame before you take any action. Now, if you don't find this, if you find this pattern here, this 3 candle pattern, this is a strong reversal pattern. So if you find it on the daily time frame, then you will now have to switch to the 1 hour time frame. 1 hour time frame is going to be your entry time frame. But on the 1 hour, if your entry zone is too large, you can scale down to the 5M, okay, to take your trade so that you can have a better risk to reward. I hope you understand what I'm trying to say. It's the same exact thing here. Now, this first 2 diagrams, they are for the bearish scenario, and this one is for the bullish scenario. It's exactly the same thing. So these are the things you will find, you need to find on your daily time frame. Once you find any of them on the daily time frame, then you go to the 1 each time frame to enter your trade. I'm going to lead you by hand and show you all of that. From the weekly time frame, if price is reversing, you will be able to know that for the whole of that week, for example, if price is reversing to become bearish, you know, for the whole of that week, you should be looking only for sell opportunities. You don't want to buy. Okay? If it gives you a buy reversal signal, that means that throughout the incoming week, you are going to only look for opportunities to buy the market instead of selling. That's how you stay away from bad trades in the market in the course of the week. Now, let me take you to the live chart and show you exactly what I mean. Okay, this is AUD USD weekly time frame. Like I said, we need to first check the weekly time frame. Now, I'm going to show you what you need to look for or look out for. And secondly, this strategy is best even when the market on the weekly time frame seems to be ranging. If you look at AUD USD weekly time frame, you can see that we are pretty much bearish. Okay, but it is not so much about these structures that you are seeing here, making lower low, lower high, lower low, lower high, lower low, lower high. No. Now, I'm talking about each of these candles, such as this here. Let's look at this. I've said this before in our previous upload. I said when you find two different colored candles, you need to be able to read the market using that alone. For example, look at this. This day, a bearish candle was printed, and I mean this week, not this day. This is a weekly candle. Each of these candles represents 1 week of trading data. Now, this bearish candle was printed that week, and then the following week you have this bullish candle printed. Now you have black candle and the blue candle. That's what you need. Once you find this bullish candle printed, and this bullish candle was printed on the 19th of May, which is a Monday, all the candles that you find on this weekly chart, they are printed on a Monday. Now, once you find these two colored candles, you should have at the back of your mind that the incoming week will be a bearish week. Why? Because of these two colored candles here. First of all, the bearish candle followed by a bullish candle. Now, does it mean that price is going to be bearish all through the following week? Yes, sometimes it can be bearish all through the days of the incoming week. And sometimes it could be just 3 days of the incoming week or 4 days of the incoming week. It depends. But what you should know is that you want to sell the market in the incoming week. So we are going to be looking for opportunities to go short on the 26th of May. Okay? Once you have identified that one, you want to go to the daily time frame. Please follow me at this stage, because there are some other things I will add. I will tell you so you can understand. I couldn't do that when we were looking at the diagrams, but now pay very close attention. So we are going to the daily time frame now. This is the daily time frame of AUD USD, and we want to look to trade on the 26th of May. That's all we want to trade. So let's look for the 26th of May here. Okay, so this is the 26th of May, which is a Monday. Okay, so you have Monday candle, Tuesday candle, Wednesday, Thursday, and then Friday. Now, look at the beginning of the week, what has happened here. Okay, so is not different from the diagram I showed to you. This is one of the two diagrams I showed to you. Now, how do I mean? Look at this. Price took out this previous day's candle's high with the candle wick. Can you see that? After taking it out, price closed below this candle that swept that high. Apart from that, to give you a solid background, look at the structure high here. This structure high was taken out by this Monday's candle wick. Now, once you find this scenario playing out on the daily time frame, so you will switch to your 1 hour time frame, and you are going to look for this same exact pattern, either this one or the engulfing candle that I showed to you in the diagram. Now, but you are not going to wait for this Monday's candle to close. Remember, this is a daily candle. So each of the candles you find on this chart here represents 1 day, 24 hours of trading data. So you are not going to wait for this candle to close, because if you are going to wait for this candle to close, you would have missed the opportunity of trading on that day. And if you miss trading on that day, you will have to wait for Tuesday before you can start trading. Please take note of what I'm telling you. So what do? What you do is that when you have seen this structure high, if price is rotating back down on this candle of that Monday, once it comes below this high, this previous structure high, or this previous day's high, okay, first of all, this previous structure's high, once it comes below it, switch to your 1 hour time frame and also wait for any of the two patterns I showed you. Okay, that's what you're going to do, because if you wait for this candle to close, you would have missed the opportunity to enter the market on Monday, and you don't want to do that. You want to be aggressive. So we want to switch to the 1 hour time frame now using this candle. Now, on the 1 hour time frame, you want to find exactly something like this. But one more thing, before you pull your trigger, make sure that it is within the London or New York kill zones. Very important. You don't want to trade before the opening of the London kill zone or the New York kill zone. This is very crucial. Very, very crucial. You don't want to take your trades from the middle of nowhere. You can actually locate your zone before the London key zone or the New York key zone, but the actual pulling of trigger must be within the London key zone or the New York key zone. Please take note of that. So now we want to go to the 1 hour time frame and see whether we can have any opportunity here to join the market. So this is the 1H time frame, and we are looking to enter this trade on the 26th. Remember that one. Now this is my London key zone and this is my New York key zone. This indicator can be found on the trading view. Just look for ICT sessions. Okay, any ICT session you can use and configure it a London key zone and New York key zone. My London key zone starts from 2 to 5 a.m. and New York key zone starts from 7 to 10 a.m. Eastern. Okay, so now let's look for the 26th of May. Okay, this appears to be the 26th of May. This is the line where price swept liquidity on the daily time frame. Okay, so after price swept this liquidity, look at this pattern here that I told you of. This is the previous day, the previous candle's high, and this candle came and took it out with a candle wick. Can you see that? And after taking it out with the candle wick, the next candle closed below the low of this previous candle. Once you find that, what do? You are waiting for price to come back into this candle here And as price comes back into that candle, you can pull the trigger. But remember, it has to be within the London or New York key zone. We identify this zone before the London open. Okay? But you need to wait for price to come into this zone. If it doesn't come into this zone within the London key zone or the New York key zone, you don't need to take trade on that day using this strategy that I'm talking about. You don't need to. You need to wait. As you can see, all these ones price tapped into this zone, but this was before London open. Okay? Now, when London opened, price tapped into it and dropped. Your trade there, stop loss just above, give a buffer, and then you target some form of low, maybe that low, whichever one. And if you did that, boom. But I want to advise you, if you are targeting, once you get it on a Monday and you want to target, please target the low. This low first. Once it closes below this low, look at this low. Once it closes below this low, then you can begin to trail your stops. And then the next target will be here. Once it closes below that one, you can target this next low. All right, that's how you trade. You have to manage your trade very well. And if you did that, look at the massive trade we would have gotten here. This would have given us about 5.something hour, 5.74 hour. That's massive in a single trade. This is happening on Monday. Now, let's go to Tuesday. Do we have any opportunity on Tuesday to enter the market? Now, remember, this is Tuesday, London key zone and New York key zone. And let's see whether we have any opportunity here. Trading is all about logic. Okay? Trading is not so much about strategy, but about logic. If your strategy does not come with logic, there's no point. Remember that price has already grabbed liquidity here in the form of inducement. And if price has grabbed liquidity in the form of inducement, you don't need to wait for any other liquidity or inducement to be grabbed. All you need to do is to take your trade from here. Look at this pullback. That's your trade. Okay? And price came back and tapped into it. You can go to the lower time frame and refine the zone, like I told you. This is going to be too large for you on the 1 hour time frame. So you can get to the 5 minutes time frame and refine this zone so you can find a better trade. Again, Wednesday, let's look for Wednesday. This is Wednesday's London key zone and New York key zone. Okay, so now look at this on Wednesday. The same pattern I showed to you. Look at this. Price took out this high and dropped. It closed below this low. Can you see that? So where is your zone to look out for? Remember, you will need to only pull the trigger during the London key zone and the New York key zone. Look at, you mark out the high of this candle. That is your zone, guys. Why? If you go to the lower time frame, you see this candle wick that took out this previous candle's high. It took out this previous candle's high. If you go to the lower time frame, like the 5M, you will find something there. So all you will do is to stretch it out and boom. During what? During the London key zone. Look at the London key zone here. This is the last candle within the London key zone. Okay? It has to be within the London key zone. And boom, you will take your price lower. So if we were to frame all these trades, look, you would have made so much. This one, if you enter the trade from here, think about it. This stop loss would have been so much. But if you are comfortable with it, why not? And then in this case, because the stop loss is much, you can only target 1 to 2. I will advise you to target 1 to 2. Once it gets to 1 to 2, you are done with the trade. Why? Because price can do anything. Okay? But please manage your trade very well, because price can do anything. So that is for Tuesday. Then this our Wednesday. Look at it. Look at what I mean. Take your trade, give a buffer to your trade, and target this low. And if you targeted this low, it will give you 2.72 hour. You can even trail it after closing below this low. You still continue to trail your stops. So you have trade on Monday, Tuesday, Wednesday. It was only Thursday. This is Thursday that price started going higher. Thursday price went higher. So on Thursday, where would you have taken opportunity to enter the market? Well, from our strategy that we use, we don't have any opportunity here on Thursday to take price going short. We don't force trades. We trade what the market offers us. We do not force any trade. Don't force trade out of the market. If you don't find any clear, clean trade, do not enter the market. It's not compulsory that you trade every day. I do not trade every day. Sometimes I trade once a week, twice a week, 3 times a week, depending on what the market offers me. But each time I take the trade, I want to take a high probability trade. I do not just want to enter the trade randomly or enter the market randomly. This is the way for you to understand what to do in every incoming week. As the week is opening, you know what you should be expecting within that week, and you want to stick to your analysis. I hope this helps you. I just hope you can go sit down and then really look at the markets the way I've told you about, and then find a better opportunities for yourself. All right, guys, if you are new to our channel, please consider hitting the subscribe button and become part of the family, and turn on the notification so that anytime we publish a new video, you will be notified about it. And if you enjoyed this video, please give us a like, and sign up to our free Telegram channel. I'm going to leave all the links in the description. And if you want to join our VIP community to learn more, the doors are open for you to join. All right, guys, thanks for listening and for watching. I'll see you in our next episode.